What is going on, guys? It is Scott from Crypto Insider, and today I am going to give you a preview of a little something that we've been working on. So over the last 6 months or so, we've learned a lot. Our group has exploded from just me and a few other people all the way up to about 3,000 members. In that time, we've realized that a lot of people really want to get involved in trading cryptocurrencies, but typically they don't fully understand the market, the dynamics going on between Bitcoin and altcoins. All of this is much different than your Forex or your traditional equity markets. So over the last 6 months, we've learned a lot, and we've realized that we want to create a video product for you guys that will help you better understand the nuances of trading cryptocurrency. So today, I'm going to give you a small preview of what we're working on, and I hope you like it. So the number one thing when it comes to trading cryptocurrencies or trading in general is you need to understand support and resistance. A lot of people will look at a chart and say, that's all random. You know, those movements are based on news or press releases or quarterly reports or annual reports if you're talking about traditional equities. In crypto, maybe it's a partnership. And while all those things do have an influence on the market, you can't actually trade those unless you're privy to news before it happens. You can't continually make trading decisions on those types of events. And if you do, it's called insider trading. It happens a lot in crypto, unfortunately, but that won't be the case forever. So let's learn how the markets actually work. So I'm going to start by giving you guys a quick overview of how to find support and resistance on a chart and what it means to have a significant level of support and resistance versus something that's not as significant. And one of the biggest mistakes that I've seen from beginner traders is zooming too far in on the chart. Now, if you look at this chart, you'd say, wow, we're in an uptrend. We're moving higher. Well, what most people fail to realize is right up here in the corner, we're looking at a 5-minute chart. What does that mean? So each little tick here, each little candle, that's representative of 5 minutes of trading. So while this does look like we're in an uptrend, this is just slightly more than a day and a half of actual trading data. It's not wise to make decisions based on such a small piece of information. So when you're looking for support and resistance, it's helpful to take a look at all different time durations, all the way down from a 5-minute chart all the way up to a 1 day or even a weekly chart to get a better idea of what the actual trend in the market is and to find levels of key resistance and support. Now, I keep talking about resistance and support. Now, it's helpful if you have a better understanding about why these are important. So support is the floor, something that's helping support the price. So support, floor, that's an easy way to remember it. Resistance is kind of a ceiling. It's something keeping the price down. It's something that a bull market will run into and bounce off of, whereas support is something a bear market might come down and hit and bounce off of. Now, why are these important? Well, these key areas typically have a lot of trading. A lot of buying and selling takes place around these areas of support. And when you have one of these areas of support break, you typically have big movements. Now, as a trader, that's what you're looking for. You're looking for big moves up. You're looking for big moves down. You're looking for that volatility. You don't want to trade in all the chop. You know, right here in the center, that's chop. You don't want to trade that. You want to trade, you want to get that. You want to get this nice spike. You want to get that nice spike. So we're going to focus on ways to look for support and resistance, key support and resistance, that will give you a better opportunity to make big gains. So let's throw away this 5-minute chart here and let's zoom out. Let's get a bigger picture of Bitcoin. So let's zoom all the way out to the daily chart. All right. Now, we're obviously, if you look at it as a whole, we're in a bull market. But in 2018, we've seen a nice pullback here. So while we're still technically in a bull market, we've definitely had the hints of potentially moving into a bear market right now. So this gives us a better picture of what's actually happening in the market right now. So we're not going to do any support and resistance just yet. We're going to look through all the charts and get a better idea of what's actually happening. So that's our daily. Let's go down to the 4-hour chart. All right, so the 4-hour chart looks a little more bearish. We've gone from a high of 19.8 down to about 6,000. That's a 66% sell-off. So wow, that's pretty significant. That's good to know that over the last 3 months here, we've had a 66% downswing. All right, let's zoom in a little further and see how we're doing over the last, say, 2 months here. Well, the last 2 months don't look as bad. You know, we came in around 14,000. We're now at 10,000. Obviously down about 30%, but still not the end of the world here. We had a nice bounce off of our lows of 6,000. And this is the first area that I'm going to mark a support level. So right here, it looks like we had a nice bounce off of this number. So let's draw a support line here. All right. So we'll get to that soon, but I just want to point that one out. All right, so let's zoom in just a little further, and then we'll start getting to work here. All right, so our 1-hour chart. All right, so as you can see, we went from our daily chart that had a clear bullish trend with a nice pullback, and we've slowly progressed down to the 4-hour chart, 2-hour chart, 1-hour chart to get a better idea. So the 4-hour chart, we were still a little bit bearish coming off of downswing. The 2-hour chart got a little better, and now in the 1-hour chart, things are starting to look a lot better. We're starting to move higher. Okay, so you can put all of that in your mind and say, okay, this is actually what we're looking at here. You have a better idea. So we're going to do one more chart. We're going to get down to the 30-minute, and that's going to give us an even better idea of what's been happening in the last 2 weeks. Kind of a neutral. We've tested some highs, we've tested some lows, and we're still right in the middle. Okay, now we got our picture. So how do we find areas of significant support and resistance? Well, the way that these candles work, it's helpful, in my opinion, to start particularly like not too small, but say the hourly chart and kind of work higher. If you go to like the daily and into the 4-hour charts, it's easy to sometimes miss areas of key support because the candles are so long and so big. Sometimes big moves happen within that, and it's hard to actually find the key levels. So that may be a little confusing, and I'll clarify it a little bit more as we go through this process. So let's start here on our 30-minute chart and see if we can see anything that kind of sticks out, okay? Well, obviously right here is an area that we bounced off of, so that's interesting. Also right here. So one helpful way to find areas of support or resistance are touch points. The more a price touches and bounces off of an area of support, that's indicative that it's an important level. So let's draw a support line right here and see how many touch points we can actually find. All right, so look what happened here. We looked at this one area over here and we saw that Bitcoin hit that level of support 3 times and bounced. All right, and then we drew a line to past pricing information, and lo and behold, we found more touch points. So it's not a coincidence that Bitcoin bounced there. Now, we could have used that past information to make potential trades. Now, does that always work? No, but we use the information we have to capitalize on potential trends and big moves in the market. So let's zoom in and take a look at each one of these touch points. All right, so keep in mind, I have a log scale, logarithmic scale. So it condenses everything, and it's helpful in a way that when prices get too big, especially with Bitcoin, since we moved from $1 up to 20,000, the scale can look, the chart can look a little intimidating, and you can't really get as much good data from it. So this is your typical numeric scale. Now, it's not as helpful to kind of see the current trends as they compare to past data as using a logarithmic scale, which relies on the ratio of the prices for Bitcoin. So that's a lot more helpful. You can see the price moves in relation percentage-wise to Bitcoin. So, all right, sorry for the tangent. Let's jump back in. We were at the 1 hour chart here. Okay, so, all right, we have these 3 touch points here, and that was something that just stood out to me. And I think if you have an idea of what to look for, you'll be able to easily find these things. So this right here, you have 3 touch points. We go across here, and I'm going to put a couple circles here on areas that I want to address. There. And here. And here. All of those are going to tell a story here. So right here, a way that you can tell if an area of support or resistance is in fact truly support or resistance is you can look back and take a look at the price movements around that level, a price level. Now, if you have a typical area of resistance, when you move through it, there are typically big moves that go through it. Imagine, you have a can and you have like kind of one of those little exploding kind of like things that come out that kids love, like the little like a Jack in the Box type thing, right? So you have that little compression, you have that toy that goes in there, and you push it down, and finally it comes out and it has a nice big explosion, right? So that's kind of how resistance works. So you have the price being beat down by this level of resistance, and when it finally gets through, you don't have a lot of sellers to keep the price down. All the sellers had their offers around that area of resistance. So when it finally kind of breaks through, you don't have any sellers and you get a bigger movement. So you'll see here, we'll zoom in a little bit. You'll see a nice big candle here, right? And you'll see them all over the chart, but like this is obviously indicative of an area of resistance. So that's kind of check 2, that this may be an important price level. So we had these 3 areas where it bounced off, and then over here, remember Bitcoin just had a nice correction here, so we're moving down on this side. So it's important to realize the trend on each side. So on the middle circle that we're looking at right now, Bitcoin is right now in a downtrend. So it actually is going to be helpful we jump to the first circle. So the first circle, we hit this level of support. Now, keep in mind, at this point, it's support. Bitcoin should bounce off of this level of support, but we moved right through it. We barely stopped. Now, we did come back up and retest it, and that's another checkpoint that says, you know what, this is a key level. So just as you'll move quickly upward through resistance, with support, you should bounce off. You should move quickly down through it. So this has two more pieces of information that help us identify that this is indeed an important level of support and resistance. It moved through quickly, and it was a big move. It came back up and retested. And I don't know if you can see it. I'll zoom in just a little bit more. So we moved quickly through, came back, retested, failed, moved lower. That's very, very common. You will see that both when we move downward through support and upward through resistance. So two pieces of information here, again, all go towards, yes, this is an important level. Not only is it an important level, it looks like it's a really important level. So we came down with Bitcoin, we bounced off about 8,000, came back and retested this a number of times. I can see 1, 2, 3, 4, 5, 6 separate touch points here. So this is a very key level with Bitcoin. And this is an area of major support and resistance. So that is a good way, and these are some good tests to actually see if you have the right support and resistance level. So what I want to do now is let's zoom out to the 4-hour chart. We have a good idea of where our support and resistance are. And let's just take this line all the way across. And keep in mind, we didn't know, I swear, I didn't even know that these were actually going to line up. I was just going to focus on the short term. But look how much this actually lines up with areas of other support and resistance in the past. All right, let me get this little circle tool out here. Major bounce off of there. On the way up back in, this was in December, lots of movement and bouncing off of this and a big move through. So this, let's call it 9,400, 9,500. And keep in mind, when you have an area of support and resistance, it's not a specific number. It's more of a range of numbers. So let's just say, for example, this line is at, 90, 94, 43, whatever it may be. That's not like the specific area of support and resistance. So when you're setting stop losses, which is something we'll get to in future videos, you want to have some buffer there. If you set them too tight to the area of support and resistance, you'll have what people refer to as stop loss hunting, and you'll end up getting stopped out. So let's say this is our area of support and resistance. Like right here, we dipped below briefly. It doesn't mean that it was broken. It just means that we broke it temporarily and ultimately came back. So let's do this. Instead of thinking of support and resistance as just a line, we're going to set kind of a range, right? So right here, we'll set a bottom, and we'll adjust it as we go across. That way, we can change your thinking about what actually is support and resistance. All right, so right here, that was kind of our bottom. Over here, that was kind of our top. All right, so let's keep going across here. Go to the 4-hour chart. Make sure, there we go. We'll correct that. All right, so right here, all the way across. So that gives us a better idea of a range that our support and resistance will be, not an actual number. So that's about 95 down to about 92 to 75. So that is a very key area of support and resistance. And you can see that just by looking at this price movement at the end of February, we actually backtracked and found correlations to what happened in February, in early February, in December, in November. And that's why it's not just pure randomness when you see it on a chart. You can actually read into some of this information and make trading decisions upon it. So now that we know that this is a key area of support and resistance, how do you trade upon that? It's a great question. So let's say we'll use this example right here. We're going to be coming off this little rally here. Bitcoin kind of ran out of steam on this rally, kind of stalled around 11.7. All right, so you're looking at where am I going to place some bids in the market? Where am I going to look to re-enter? Let's say, hypothetically, we sold up here. We sold the top. We're the best traders. So where do we look to re-enter? Well, you're going to do the same thing. You're going to look for areas of support and resistance in the chart and then decide, okay, I can place bids at areas of support because we'll likely get a bounce. Now, there are other areas of support in here, but let's say we got to here, we put a bid in right around 93.80, somewhere in the middle of this range, and that's our trade. Now, how do you protect yourself? Remember, if we break through the bottom of this support, we're going to move down quickly. So what we do is we set stop losses below it, because when you break through support, you're going to get a lot of price movement downward because a lot of people are going to get stopped out. A lot of people are going to sell. So you want to protect your downside because you don't want to get caught in one of these big movements. Look right here. When we move through from 9,300, and then in less than, that was a day, we're down at 7,900. I mean, you don't want to take those types of losses, so you can set stop losses to protect yourself. You can't always be at the computer, so that's how you protect yourself on the downside. Now, how about the upside? Well, on the upside, the same thing. You don't want to jump the gun. You don't want to buy before you've broken resistance. And here's an old saying in trading, and I'm not going to get this right word for word, but let's say you have resistance that's at 10,000. I'd rather buy 10,100 than buy 9,900. And I guess this isn't much of a saying as more of a story about how to be successful. And the reason you'd rather buy 10,100 than 9,900 is just based on your expected value of the trade. So think about it. If you buy 9,900, your resistance is 10,000. So your upside is $100. That's unless it breaks. And most times it's only going to break once, right? So most times it's going to bounce off. So your upside's at $100, but your downside is always going to be a lot worse. So on the other hand, if you give up that, say, $200 from 9,900 up to 10,100, give up that $200, now your upside's a lot more. Typically, the price will move and try to test the next level of resistance. So now you have all of that upside. And guess what? Your downside, your support is now that 10,000. So now your downside's about 100 and your upside is where that next level of resistance is. So that's why we don't want to buy prematurely when talking about making moves around resistance and support. You want to make sure you buy a clear indication that it has broken. And that can be hard because those moves are the biggest and move very quickly. So Now that you know how to find areas of key levels of support and resistance, now you can start building a better foundation on how to trade, because support and resistance truly are the fundamental building block of almost all indicators and almost all smart trading decisions. If you don't understand this and you can't find an area of support and resistance, don't try to learn other more advanced trading skills until you've mastered this. This truly is the most important part about trading. Moves in the market aren't sporadic. It's not random chaos. There is an element of randomness to it, but there is some framework that kind of controls the market, and that is support and resistance. So I hope this was helpful. We're going to talk about this all the time in our future videos. It really is the most important, I'm going to keep saying it, the most important thing you have to learn in order to be successful. You can trade just using support and resistance. I know people that still do it and are very successful. You don't need a lot of fancy indicators. If you can master this, you can still be very successful. All right? So this is a preview of our upcoming video series here at Crypto Insiders. I hope this was helpful, and I look forward to seeing you guys in the next lessons. Take care.